I think I finally got it. Didn't Warren Buffett say, be fearful when others are greedy, and greedy when others are fearful? So, if I specifically look for the stocks that have fallen the most and are getting the most hate, that's real contrarian investing, right?
I've seen this movie too many times. That's not being greedy when others are fearful. That's others are jumping off a cliff and you jump too, thinking you're practicing a high dive. The form might be different, but the outcome is roughly the same. Been there, done that. The core of contrarian investing is buying when the price is below intrinsic value, not buying just because the price is low. It's like going to an antique market. You can't just pick the most broken, worn-out bowl thinking it must be a priceless Yuan dynasty piece. It might just be a broken bowl. A stock can fall hard because it's a rotten apple decaying from within, or because it's a good apple that just got stepped on temporarily. Your job isn't to blindly pick up the dirtiest one, but to figure out which is merely dirty and which is genuinely rotten. Even more dangerous is catching a falling knife in a downtrend. You think it's hit bottom after a 50% drop, only to watch it fall another 50%. Sometimes the market's pessimism is entirely justified. If you're being contrarian not against sentiment, but against facts, that's not bravery, that's stubbornness.
But don't all the big winner stocks start out being ignored and unloved?
True, but out of all the ignored and unloved stocks, probably less than 1% ever become big winners. If your strategy is simply buy what nobody wants, that's like treasure hunting in a landfill. You might find a treasure, but you have to ask yourself, are you actually an appraiser or are you just collecting garbage? A true contrarian investor buys when the crowd is wrong, not when they're fighting against a crowd that is right. For example, buying a good company facing a short-term problem, its long-term competitive edge intact, when the market is panicking and selling. That's contrarian investing. Buying a company whose business model is broken, everyone is selling. You know it's bad, but you're just betting on a dead cat bounce. That's gambling. Remember, contrarian investing is one of the hardest paths in investing. It requires you to see deeper, more accurately, and further ahead than most of the market. If your only idea is to do the opposite of everyone else, you're probably not outsmarting the market. You're just picking a fight with it.